All right, guys. So, rule number one is always, always, always think long term. Do not get impatient with this. If the market turns down for month one, do not start selling. This is a long term approach. You want to pick stocks, pick companies that are going to be able to weather these storms, and they'll be around in 5, 10 years. And do not act on emotion. That's one of the hardest things about investing is to become a non-emotional investor. And if there's one lesson that trumps all, think long term and do not be emotional. And at the same time, compounding effect of reinvesting your dividends, it takes time. It might not be great the first year, it might not be great the second year, but it's a snowballing effect. It starts small and over time it will pick up steam. It'll get bigger and bigger and bigger. And once you hit that point where you see it getting bigger, it'll click. And from that point onwards, you'll understand what it means to think long term. And that's if there's one piece of advice that I could really truly impart to you is do not think about making a quick buck. Think about how you can make money over, a longer time period and truly set yourself up for financial security. It's not about how do I make $100 and then get out. It's about how can I get this to the point where I'm making $1,000 a month through dividends. So that is by far the most important lesson that I could teach you guys throughout this entire course.